And I think that is live. How are we all doing? So with the 14,000 subscriber milestone hit, I thought I had said on the last video actually on the UK stocks I'm buying, if you're able to get there, we'll do the live Q&A session, and you guys managed to get there. So here we go. Here's the reward. I didn't think it was going to happen, and then it just happened a couple of hours ago. So I thought, here we go. We'll go for it. So um, only used to doing these on the actual Patreon. We normally do 8 exclusive videos a week on Patreon. Sometimes a couple of them are actually like live Q&As. So to actually do it on a YouTube channel, we haven't done this for a really long time. Like the last time we did some live Q&A sessions on the YouTube, I think it was like 13,000 subscribers, which seems so long ago because with the kind of bear market that we've been in, there's not really any new people kind of going to the stock market. In fact, everyone's just really left the stock market more than anything. So it's been quite hard to see the subscribers go up recently. So yeah, it's been a tricky time. But as always, I'll just give a minute or two just for everyone to kind of join, and we'll see how we do. It'd be good to see. I think we normally get a good 30 or 40 in the live Q&A sessions that we do on the Patreon. So I'm hoping on the YouTube that we get like 300 plus. I don't know if I've been a bit too optimistic there, but we'll see how we do. But if you guys have any questions, fill them in the comment section, and I'll try to get through them all. I can see a few of them actually starting to come already. So we'll go through some of them here. So first one, hi, congratulations. Thank you so much. A quick glance into IKCO. I never even heard of that. I followed YouTube blindly, sell or hold. I'll have a quick look. I don't like doing too many stock looks into stocks just because it's a bit faffy. But I will do this one for you really quickly. And also, like, it's only a stock that really applies to you. I cannot even find this stock. Have I got the right stock here? Where we are? IKCO. It's not even coming up for me. Sorry, I cannot find that company. On Super Wall Street, it's not. I don't know if that's the ticker symbol. Yeah, I'm not sure if that's the ticker symbol or the company name, but either way, the company name's not coming up and the ticker symbol's not coming up. So, sorry, I cannot tell you. But that does tell me it's probably a really small company if it's not coming up. Roll on Friday. What's happening Friday? This week's a busy one. Inflation data, interest rates coming out. It's going to be a busy one this week. I know that. Favorite 5 to 10x stock from here. I mean, that's a big return. It's a big return. If you're asking me which of my stocks I own, will probably most likely 5 to 10x at the moment. I think you're probably looking at one of the growth stocks, obviously. So I would say that looking at the moment and how things are performing, and considering some of the averages I have, I'd probably go Hims is probably the one that I'd back as the one that would do that from here. So we'll see. We'll see. You never know. Thank you very much, AK, for the congratulations there. The TJ, always in the comment section. Well done, Jake. Thank you very much. Question for Fang Stocks: will they continue to rise? V-shaped recovery seems relentless. That's the thing, I was saying this all the time in the bear market. People always forget like what bull markets are like. People are so obsessed with the bear markets. Like people forgot that when bear markets come, the negativity really comes and starts pushing them stocks down. But when we get the bull markets, like people forgot, like the bull markets carried away. People have already forgotten like 2021. People have forgotten that when bull markets, start kicking on and the momentum kicks on, people get greedy. People get really fearful on one side and they get really greedy on the other side. And that's where we're at with the FANG stocks. The really interesting thing that we have at the moment is just seeing like the gap at the moment between the FANG stocks and everything else. Like the FANG stocks are just really running away from it. And then you look at everything else that isn't like really AI related, and everything like that is still kind of holding back. Like if you look at the Russell in particular, like the Russell's still like really low valuations compared to what it normally is at, and compared to the S&P 500 as well. So that's been the most amazing thing to see. But I mean, the greed can just continue. You saw it in 2021. Greed can continue and continue and continue. The only problem is like I always refer to it as like an elastic band. Like you can, at some point it should be a normal shape, and eventually the longer you pull that elastic band longer and longer and you let it go, it's the quicker it snaps back to where it should be. And it happens on the downside and it happens on the upside, and that's the only thing that I would be looking at the moment. So, but yeah. Well, Harry, when I scroll further down, hopefully I've got your question down there. Provide a view on, I don't even know how to say that. Anpro PLC, ANPL. Oh, it's a UK company. I'll have a quick look. Like I said, I don't like doing too many stock requests on the actual live Q&A sessions, just because it's quite, it just takes a lot of time for me to try and find the company and have a quick look into it, and it gets quite boring while I'm doing it. AN. Okay, I'll just have a quick look here. So what is it? It looks like a bit of a dividend stock. Looks okay previously. What we trade at 16 times earnings. Not a bad dividend yield. I mean, yeah, it looks like a company that won't give you much share price return. Saying that, the financials haven't done too bad previously. They might give you some share price return, but you're looking at it from that dividend point of view. Dividend looks pretty decent. Looks a good balance sheet. Looks like there should be no problems paying out that dividend yield, really. From what I can see at the moment. Let's have a look. What's the stock chart like? Yeah, it's having a bit of a dip at the moment. Yeah, I mean, I wouldn't expect too much return on the share price. But from a dividend play, it'd probably be a stock that maybe give you a good dividend from what I can see there, from what I'm seeing there. We've got Wes joining us. Hey, Jacob, it's Miles. Well done on the 14K. If you ever think I'm a big bull in DraftKings, Miles is probably a bigger bull in DraftKings than me. Probably got my head above water and consolidating my accounts where my two big players are DraftKings and Tesla. Good stuff. I remember doing your portfolio review a while ago on the Patreon. Be interesting to maybe have a look at it once again now. You've had that bit of a bull rally. You've probably resolved a few of those things that we saw last time. So it'd be quite interesting to see how that portfolio is doing, to be fair, on the Patreon sometime soon. I'm up pretty big, however, I'm not sure what to do. I feel that especially Tesla is going to come down again quite soon. Should I take someone off the table? I mean, you don't want to be planning on what Tesla's going to do in the short term. You got to look at long term. Do you think Tesla's still going to go up long term? If you still think it's going to go up, then don't sell your stock. However, you can always counter that. If you think, Tesla's gone up quite a fair bit, but I don't want to sell in the long term, you can always take 5% off the table, 10% off the table. And then if it does drop, then you go, that 5%, 10% I sold, I'm buying back in now and I made profit and now I'm getting them cheaper. And then if it does continue to go up, then you go, well, I only sold 5-10% on my position and I've still got the rest to hold it. And with that 5-10%, you could actually go use that potentially somewhere else. You see another opportunity. I'll just hold it in cash for another time. Without doubt, Tesla will have a dip at some point, as every stock does. So you will probably get a chance to buy Tesla on a dip. It's just, when is it going to happen? Is it going to be next week? Is it going to be in 2 years? You don't know. Harry, is this your question? Thanks, though, Harry. Just leave them as I'm in them for long. I just keep raising my stop losses. I'm not a fan of stop losses. If you're a long-term investor, I don't believe in stop losses. Please explain the ASOS recent fall. Yeah, they brought a trading update out, and the trading update was hideous. That is the reason why it fell. Is ASOS a buy? I don't think so at the moment. I've been put off the buy after the trading update. I would like to see them make a bit more progress for me to buy at the moment. So, yeah. I've got a question from Swift Finance. Congratulations on 14K, mate. Thank you very much. What do I think of NIO stock right now? I feel like current headwinds are short term and seem like a 5 to 10x from here. NIO, I think, looks decent. The problem is you've got because they're so reliant on China, there's all the issues with China that's kind of going on now. Like I said, I would always prefer to buy Tesla over NIO if I had the choice, just because Tesla is more worldwide and I don't know how much I would trust that Chinese economy. The problem with NIO is that hopefully they can get back to the growth. They've had a bit of a tough time sticking us with the revenue at the moment, but the big thing is the losses. They need to start driving up the losses into profitability, and that's the big issue that you have with them. And until they do that, then I won't see NIO 5 to 10x as what you're saying here. So that would be the key thing: is can they get back to the growth, and then they need to drive up the profit and revenue is what I'd be looking at. STEM. I've heard of this company before. I think it's is it an MJ play? I think it is. Oh no, it's an energy storage network. Got that one wrong. Yeah, it's got good growth. It's growing rapid. It's growing absolutely rapid. Losses are a bit of an issue, but they are forecast to start moving into a positive direction. What's that balance sheet like? Balance sheet, it's got a bit of debt on there, hasn't it? Bit of debt. 105 million in cash. Oh, so you got an issue here. You see, they're going to lose 113 million in cash. They're probably going to need an equity raise in the next 12 months. That balance sheet isn't the best. Growing good, but you've got to look at the profit and balance sheet. I personally, this is something that for me to be interested in something like this, I would personally, what's going on in the share price? Is it diving at the moment? Yeah, it's diving, isn't it? For me, this would be add to a watch list. I'd come back in 12 months, see how they've done with that balance sheet. They probably want to raise some equity. And I would come back and see what guidance they're giving to drive up profitability. Because if they get another year, they're going to lose 113 million this year. If they lose another 113 million next year, they're out of cash. So if I was interested in this stock, that's what I would probably be looking at. Is I'd give it another year. I'd add it to a watch list, look at the earnings, see how they raise the cash, see how they get to profitability, and that's what I'd be looking at. Gerch, you've been subscribed for a while. You must have been subscribed for a while. I remember. I'm sure you were commenting like in 2020. Let's have a look. Vino. Another UK company. We're getting a lot of UK companies tonight. Virgin Wines UK. Let's have a look. What we're trading at. So it's 9 times earnings. It's profitable. What's going on with the share price? Is this declining? Yeah, it's declining. 17 million market cap. Ooh, that's a small market cap. That's volatile. That will move up and down a lot. Let's have a look. So the revenue's pretty flat, really. They don't have a good track record of ramping up the profitability. What's the balance sheet wise? They've sorted the balance sheet out. The balance sheet didn't used to be the prettiest, but it's a lot better now. It's got 14 million in cash. No dividend, I'm guessing. No dividend. Yeah, I mean, I don't know. From what I can see, I don't see anything attractive in it. Like, it's a good balance sheet, but there's not much growth going on. There's not much good track record of profitability. I don't know if there's a catalyst that you're seeing, like they've signed a new partnership with someone and that's going to drive revenue. So potentially at rates going forward, or they're exporting to a new. I don't know if there's a catalyst I'm missing here, but from the numbers that I can see, I don't know what the attractive thing would be here. So yeah. What website do I use to help analyze stocks right now? As I'm doing, I wonder actually, can I share my screen with you guys? There we go. As I'm talking about this, I'm looking at Simple Wall Street. That's what I'm using personally. I've got a link in the description if you want to use it. I think it gives you 30 or 40% off your subscription. I think you also get a 14-day free trial potentially with it. So it's a pretty good offer. But I use Simple Wall Street all the time. It's just so easy to get numbers from. Especially I get like suggested like 10, 20 stocks a day to have a look at. So for me, it's a quick look to look at, easy way to look at the stock. And like you see, I'm looking at the past performance here. There's not much growth, not much profitability, not much track record of profitability. There's not many analysts covering it because it's a very small market cap at 17 million. So, I mean, that's what I'm saying. It doesn't have a great track record. And I don't know if there's a catalyst coming in and why it could be an attractive stock. So, yeah. Palantir, interesting company, crazy valuation. Thanks very much. Down quite chunky figures in my C4. I'm guessing that's S4. Capital, you're not the only one. National Express, not so bad. For me, I'm about 10% down on that one. S4 Capital's probably like 40 something percent down. So should I still be buying lower to my cost base or like what? So yeah, I mean with National Express, I'm quite happy to buy at the moment. I didn't buy in the last month just because I'm quite happy with my position size and I want to keep it cash back in case it has like another 10% dip just in case. So I'm being cautious of that. But with S4 Capital, like I looked at I don't know if you saw, but they did the AGM on Friday, and I was a little bit disappointed with the AGM, to be honest with you. So I'm going to sit back and watch hopefully the marketing industry sees that kind of recovery start coming back in. And if it comes to the higher end of the guidance, I'll be a bit more happy. But when I looked at the AGM on Friday, it put me off a little bit. I'm not going to lie. So yeah, I'm kind of sat on the sidelines at the moment in S4 Capital. It's already quite a large position as well, which I want to be careful of. So yeah, I'm just waiting at the moment on that one. But it's a marketing company in a recession. You only have to stare at Meta and Google and Pinterest and see how they've been killed off to understand that there's going to be pain in S4 Capital. The only difference is like National Express, it doesn't make as much sense because financially, you look at them guys are killing it at the moment. So, thanks very much, Kevin. It is hot. It is hot. The crazy thing is though, is my house is freezing. It's in winter. It is so cold. It is so cold. But it has the benefit that when it gets to summer and it's really warm outside, it's freezing inside. So it's actually not too bad in here at the moment, to be fair. So yeah, it has its perks, but also has its downfalls. Oh, cool. See you there, Kevin. I'm actually going to be, you guys on the Patreon, I'm actually dropping the stock request. After I finish this video, I'm dropping the stock request. So that'll be up soon. Why do you think the First Group has outperformed National Express for such a long time now? I saw First Group had a little bit of a jump up the other day. It came on my notifications. I don't know, has it been outperforming? Oh yeah, look at that share price. That's a really good share price return. Maybe am I sharing my screen still with you guys? I'm sharing my Simple Wall Street, aren't I? Let me go onto this screen for you guys. And then you can see what I'm doing. Why is that not coming up? Oh, First Group, isn't it? First Group, isn't it? Not Bus. What an idiot. First Group. Yeah, that's it, isn't it? Transportation. Yeah, it's even got the first logo. What an idiot. First Bus. First Group. That's what I meant. Right. So let's have a look. We've got valuation. 12 times earnings, as you can see here. Let's have a look at where's the share price on here? Look at the share price is pretty much where it was pre-CV, as you can see here. So if you have a look at the company hasn't really grown that much. Like if you look before the whole CV situation, the company revenue this was struggling before the CV situation, and the revenue hasn't got back to where it was. But the benefit it has had is it started to get back to profitability now. So whereas, yeah, that's good amounts of profitability for this company. So whereas National Express was doing well before the CV situation, First Group wasn't. So ultimately, like I'm sure if we look at the share price, I bet it was declining before the CV situation. Yeah, I mean, yeah, look at that. Look at that decline there. Like this was a broken company before the CV situation. So it's easier to gain on the share price when you basically priced at bankruptcy and then you turn it around and then you actually start making profitability. So that's probably why. Whereas if we just have a quick flick through to National Express, if we can find the share price here. Yeah, if you look at the share price compared to, obviously you got the 08 dip there, but if you look at the share price, really, it's been a decent performer since the whole 08 situation, which is the difference. But if we have a quick look here, if they start getting to, profitability, I think that will be the key driver, because if you start talking, 64 million in profit and then you start pushing up to 80, basically in National Express, they're getting the above revenue where they were before the CV situation, but they need to get back to these sort of, profitability. If you start getting to these sort of, profitability that they were before the CV situation, that 100 million plus, you're talking 7 times earnings, and compared to something like a First Group, for example, you're probably going to get a higher dividend yield with this one. You're probably going to be growing a lot better than that one. You profits probably going to be growing a lot better than that one. That's where the share price will double from here, and that's what I need. That's what I factored in. So that's where we need National Express really to get to. Is that sort of level. So that's why it's outperforming it really. But that's where we need National Express to get to perform well. Miles says, how long makes sense. Can I ask why you're not a fan of stop losses? Would it be wise to have 10% move? The problem with stop losses is this, right? You're a long-term investor for how many years, whatever you want to be. You shouldn't be bothered if the stock drops 10%, because if that company is going where you think it should be in the next few years, why are you selling just because it dropped 10%? Because you want to, protect some capital. It don't matter, because if you believe it's going to get there, it will recover. And the thing is, with 10% stop losses, you could literally, especially something like a DraftKings, for example, and a Tesla, literally one analyst can come out and say, "Oh, we're downgrading the stock." And with them stocks, they are sensitive and they can drop 10% in a day. You could have something like CNBC could out and say, "Oh, there's been a fire at the," and this has happened. I remember in 2019 when this happened, and it caused the stocks to drop like 20%. There was like a fire at the one on the West Coast, which is the factory at the West Coast. Oh, see, I've not looked into Tesla for a while. I've even forgot where all the gigafactories are. But is it in California? It's in California, isn't it? So the one that was over there, I think it caught on fire, and the stock dropped like 20% in one day. Like if CNBC go, "Oh, so and so factory's on fire," the Tesla stock could easily drop 10% in one day. And then you're selling out your stock that you really love and you want to own for so many years because of that article. And then what happens? Maybe next day everyone goes, "Oh, that 10% drop we did yesterday, it was a bit stupid, wasn't it? Let's go buy back in." And then the stock goes back up, 5% the next day because everyone realizes it was stupid to sell it, off yesterday. And you're there going, "Well, I've just sold this stock at an amazing average that I don't want to sell, that I'm holding for the long term, and I've just sold it now because of my stop losses." And yeah, I mean, for me, yeah, I mean, it's just so price sensitive. Like I won't want to be selling something, and I want to sell a company I love that I'm holding for the long term on a stop loss. Because the thing is, then you've got, if you using stop losses and it's a company you love, you've got to buy it. You're selling it, and then you've got to buy back in at the right price, and then you've got to sell back out the right price. You've got 4 things where you've got to get right as well, which is not great. So yeah. Dr. Martin's gone down so much. Should I grab more? Oh, has it not? I remember covering it on the YouTube channel. Has it still gone down since then? I've not checked on it since I made the video. But I think if I said, hold on, is it not Doctor? Is it actually Doctor? Isn't it? Is it Doc Martens? I have to have a quick look here. What's the ticker symbol for Doc Martens? Docs, that's it. There we go. Where's the stock chart here? Oh yeah, so where did I cover it? I must have covered it on that dip. I've got a feeling that was the dip I covered it on. So yeah, when I covered the video, it did have the kind of rally off the lows. Dropped again, rallied again, dropped again. So it's about where it was. Yeah, I mean, like I said, there's a few issues. There's a few issues with the company at the moment. Personally, for me, I don't want to buy it at the moment. I think at some time it will come an opportunity to potentially buy it. But right now, I think they've still got a few issues going on. It's one of those that I personally would add it to a watch list and come back in 2024. Because if they get back to a point where, if you look here, what analysts are projecting that revenue growth will start coming back, and then profitability will start coming back. If that starts happening, that's where it'll come. That's where it'll come a really good opportunity. So yeah, I would. For me, I'm not interested in this one right now. I would actually add it to watch list and come back in a year if that revenue growth carries on and that profitability growth comes back. That's what I'd be looking at. RP investors, considering the Russell is undervalued compared to S&P 500, are you looking to invest in any small caps, US or UK? I mean, yeah, there's a few US and UK caps that I'm buying. You know, if you go watch the UK stocks I'm buying and the US stocks I'm buying, you probably see the smaller caps that I'm personally picking up at the moment. We did a small cap on the UK side on Patreon today, which is really interesting as well, that I'm adding to a watch list. So yeah, there's a few that I'm picking up. I'm more towards smaller caps at the moment. The only really big cap I'm picking up, I believe, is PayPal. It's quite a big company. I'm just trying to think off the top of my head. I mean, Walgreens is pretty decent. Pretty decent sized company. Apart from that, I don't think there's much more, I think, at the moment. General question, during a bull market, do short sellers drastically reduce and go away? I'm down. I'm a long-term investor and shorts are always such pain. They do go a lot quieter. They're still around. Don't get me wrong. But they love it in the bear market. That's where they're really loud. You know, you've seen it in the last 12 months. Like there was just so much negativity everywhere, and you have even bulls go bear, bulls that go bearish. But yeah, in a bull market, the ones that are a little bit flaky will then switch back to the other side and chase the stocks again. So it does quiet down a little bit at the moment. Yeah, I mean, I love Greg's. Greg's has been such a good company to own, and still own. I think the valuation is a little bit rich. I should have bought it during the Liz Trust time. You know, if we can bring Liz Trust back, that'd be absolutely amazing to get some share prices a little bit cheaper. So yeah, I won't buy Greg's at the moment. K-Box, you say it's a letdown, but I only think it's a letdown on the share price. Like I looked at the last trading update and I went, it's a bloody good trading update that. When I looked at that trading update and I looked at the share price, I was like, wow, that's good financials for a company at that value. So hey. Congratulations, 40K before TV days are quite bearish in the UK due to inflation in relation to the US. I understand that. I understand that point of view. And when did you feel the same? Yeah, I feel overall the UK economy is under some pressure, but it will resolve itself. And even though I always think you want to be the majority in the US, there's some gems in the UK. There is some gems, and some UK stocks will still do very well. You know, you only have to look through this, the Brexit timeframe, which is something that is counted as weighing down the economy, and there's still stocks that performed amazing through that period of uncertainty, as you will. So yeah, I would say you want to be more US than UK. But the thing as well with the UK is that you have the upside a little bit more. You know, you have that kind of, you can see what's going on. You know that when everyone was talking about a recession in the UK, you only had to go out on the streets to see that there's not going to be a recession because people are still packing out the restaurants. You know, so you always have that benefit as well. Well, personally for me, I do because I'm in the UK. So yeah. Rob, obviously in the comments. So thanks for that. Are you already back in Alpha Wave, and did you get back in at a low price than what I sold at? I am in Alpha Wave, and I'm in a higher price than what I paid at. I cannot remember the price I paid for. I think I'm around about down 5%. So if you work out on the current share price, what that potentially could be, that's probably where I'm at. So yeah, that's where I'm at the moment. What's my bull face on PayPal? Currently PE 27. Are you expecting good earnings for growth from here? I've got a full video on it, Reese. Go check it out. It's probably better than what I can sum it up here. But right now, you're using the current PE of 27. I would say that's an absolute, not a great metric to be using. You look at what the PE is, it's a trailing metric. You look at PayPal, the profitability dropped this year as it goes through its restructuring progress. If you start using, what it will be on a forward basis and what cash flow will be, you're down at 13. So, that PE using there, automatically you're at half of that metric right there. And just look at low, look at the metrics. 13 times earnings is way lower than what it's ever been. Cash flow way lower, on a multiple basis, way lower than it's ever been. All the metrics, it's way lower than what it's ever been at, and yet the company's still growing. You'd think PayPal's not doing well. Like, this is what blows my mind. You'd think PayPal's not doing well. Like, it's growing at 8%. This company's growing faster than what Meta is. Meta, that's 34 times earnings. It's growing faster than what Google is. Google, it's 30 times earnings. It's growing faster than, I think it's very close to Amazon. And Amazon's what is it? Is Amazon 70 times earnings at the moment? Let me have a quick look. Oh, it's actually 300 times earnings. I think on a forward basis, Amazon's like 70 times earnings. So everyone talks about like it being a dead company, but yet it's growing faster than all these other FANG stocks. And then you look at the metrics, and it's cheaper than them. It's cheaper than what it's ever been on a historic metric. I just don't know. I don't know. I can't understand anyone that says, even if you come from the point of view like about competition, I just can't understand how you'd say, even with the competition aspect, like it's too low. Like it's way too low than what it should be. So yeah. Have you heard any interesting news on our favorite stock, DraftKings, when they meant to be having Investor Day? Yeah, there was actually. I wonder if that's actually confirmed on the website. I'll have a look later. It might be on the website by now. There's some talk about. Whoa! I tell you what, I've not heard that, but that would be an epic merger. Imagine that. I don't know how it'd work because they're two different companies completely, but that would be mega. That'd be mega. That would be talked about for a long time. Okay, so I've got a bit of knowledge there on Virgin Wines that we looked at a little bit earlier. Never heard of that. AVACT. I'll have a quick look. Not a big fan of looking at stocks on the live stream just because it's a bit of faffing around. But I'll have a quick look for you. I think it's this one. So straight away, I don't like this space. I'm wondering have I got the right company here? AVACTAK. Yeah. So I think this is it. Yeah, I'm not a fan of this. It's very high risk space that they're looking through a breakthrough. Yeah. Well, I don't know if this is a company you're looking at, but tell me what's investable about this. I don't know. I don't know if I've got the wrong company here, but if it is, you're gonna have to give me a reason why you think that's investable. Oh my days, that's brutal. One of my top 5 holdings on the US. I used to really bullish on InMode. If you look at the US portfolio, you'll be able to get it there. What they are, I can't remember off the top of my head. Obviously DK is number 1. But the next 4, I mean, it would be very close. Off the top of my head, I know it'd be very close between Hims, PayPal, Google, Facebook would be very close up there. I think it would be them 5 if I was guessing. So I'd go with them. I used to really bullish on InMode. Yeah, I bought like last month. So yeah, and that's me averaging up massively. So I'd still really like it. Lewis says, where do I see Top Golf in share price? I always bought Top Golf for a double up. That's where I always bought it for. Cheaper stocks, I'm guessing, as in like which ones I'm most happy to buy at the moment. That's a tricky one. There's a lot of opportunities. PayPal's number 1. I've been buying PayPal so much. You guys are the patron. When I post what I'm buying, you've seen it on that list so much at the moment. PayPal. I mean, if I didn't have National Express, I'd probably be buying up National Express quite a bit at the moment and building up a position. Top Golf was really interesting after the dip, but I think that started to rally up a little bit. And analysts came out and said they were still bullish, and it gave a bit of a recovery. So that's been pretty tempting. What was going on? I mean, Kate Box is a good opportunity. I'm just trying to run up through both portfolios on top of my head at the moment. I mean, InMode still looks really attractive at the moment. Hims is starting to get back to a good valuation, I believe. trying to think what else I've been buying at the moment. There's a few I think at the moment that are quite interesting. Be building my PayPal shares. What are your thoughts on PayPal making game time? Well, I personally got into PayPal because I think it'll double up. In the next 5 years, I think PayPal will double up. But in the short term, I think it's incredibly undervalued. Like I think I always thought PayPal at 80 was where it gets really attractive, and then obviously it's gone down to 60. I think that realistically we should see PayPal more towards the $100 range at least. Realistically, sometime soon. You know, if you take in that it goes back to what it should be trading at on a normal metric basis, and then you factor in if it can grow high single digit growth going forward. Yeah, it should do quite well. I see. It's having a few issues. Which financial should you like to collab, chat, or debate with? I don't have too much time to watch YouTube nowadays, but I always like watching Ali's World of Stocks. I think he's a fantastic YouTuber. Where is another Israeli company you should take it? I've had a look at it. We covered it on the Patreon. It was on the stock request. It's interesting. It's very, very interesting. It's a bit of a confusing business model. I'm a little bit worried about the partnership and reliance I have on Microsoft Bing. That's one issue that I do have. But I am also looking like S4 Capital and a lot of marketing companies. You know, could it, because it's been on such a good rally, could it have a pullback like them and go a little bit cheaper? So yeah, I'm very much aware of it. It's very high up on a watch list at the moment. But I'm hoping for it to be a little bit cheaper potentially. If you can get more towards 12 times earnings, that'd be pretty attractive. But yeah, it's a good company. It's a good company. I'd be wondering which one most stocks when the stock market returns. Would you see one going? Don't know about the moon, but as long as they can fix a few issues and grow the partnerships, resolve the gross margins, get back up to profitability, grow at decent rates, then there might be an okay return out of there. But yeah, it's got a lot of things to turn around first. What do I think of Darktrace? I own it. Yeah, I'm a big fan of cybersecurity in the next few years, and I think Darktrace will be a mega company in that sort of space. So I don't have a mega position in it just because of my limited knowledge. But yeah, I have just got back from doing finishing touches to revamping one of my rental properties. Currently, tenant left found he's covered the mid bedroom. Oh, great! That's not what you want, is it? Yeah, I always say 30 minutes and we go on. I'm going to have to call it soon because I've got to get the stock request up on Patreon. So I'll do a little bit longer. I don't want to let anyone down that's put a question in. So but yeah. Not if we get the 1 billion takeover that's rumored, but they've still got a lot of turning around to do at the moment. So we'll see what happens. And regret not getting into PLTR. Yeah, I mean, obviously when a stock always goes up, you're always like, I wish I bought that one. I was doing an hour at Palantir at $5. When it got to $5, $6, I was very ooh and ahh about Palantir. And I was like, shall I just open up a little position here? Because I do think the company will do quite well. I've always struggled with the valuation. So yeah, I was always a bit ooh and ahh. But the big thing you've always got to remember as well is like, there was just so many opportunities out there. Like you can't buy everything, at the same time when Palantir was $6, HIMS was $3. So it's one of those that, you go, I should have bought that. But at the same time, you've got to weigh up that everything was diving in that time. So, hey, you never know. Palantir might go back down to $6 and hopefully the whole market isn't tanking when that happens and we'll reassess then. So, yeah. Hello. What are your hopes for Skills and here? Skills I've got to have a proper dig into. I was a little bit worried on the recent earnings. I was hoping that the revenue held up a little bit stronger than what the cut on advertising was, and it didn't. So I'm going to have a proper dig into Skills sometime soon because it's not looking good for them at all. I think QES still, as soon as there's some issues that need to get resolved, and obviously taking the tough comps at the moment, there's still a decent company there. So I'm still holding them at the moment. So hopefully resolve some of the issues and there's restrictions that China are being thrown on them, because the restrictions are being thrown on them. I just can't believe how many they're thrown on them. So the fact they're starting to be a little bit lighter at the moment. I mean, ultimately, the great thing would be for Palantir to buy him out at like $13 or something and get out break even. That's what I'm hoping for, but we'll see. Diageo, I need to have a proper look at. It's a good company, but I've always struggled with the valuation. Wow. Yeah, it would be. Yeah, that would be correct. Just got SoFi at $5 plan to buy more. It's Rutledge. Yeah, same. I got SoFi at $4.80 or 90, and it's Rutledge. Is what it is. I'll hold them. I want to keep SoFi because I think it could still do really well. Normally, if it rallied up this much, I'd normally just take my profit with it being a smaller position. But with SoFi, it's a little bit different. I actually really like the company, so I want to keep holding it for a little bit longer. And if it does dip, you know, a lot of these companies like SoFi, they can, as much as they rally crazy amounts in a month's time, you've seen it. You've seen it in 2022. They drop these amounts rapidly as well. So I'll just play the long game with them. So yeah. Also need expansion plans into Europe and America seems to be exciting given to but I'd say the same what I said earlier. I've got to see them drive up the revenue and move into profitability. You remember Tesla was a really hated stock and did nothing on the share price until they got to profitability. When Tesla got to profitability in 2019 and revenue, that's when the stock went ballistic. Because until then, everyone went, it's terrible, it's terrible. And NIO probably be the same. Even though everyone has the proof that they can do well because of Tesla, it'd probably be the same. So I would add it to a watch list. And for me, I would buy NIO when I see that happening. So yeah. Background watch here, but got notification we're live, go live. Thank you very much. I mean, Cayman Islands, nice long-term stocks with BT. I like playing shorts. Sold Tesla, Bud. I don't know if I. I'm not sure which one it is. You have to let me know which stock it is. Wrong one there. Two semiconductor stocks that could be the next NVIDIA. I don't have much knowledge into the semiconductor space, but what I'll tell you is that I'm playing Alpha Wave as my exposure into that semiconductor space. So personally, that's what I'm going for. Thank you very much, Kevin. I like Alpha Wave and Kate Books, but because your recommendation, thanks. Yeah, I mean, obviously Alpha Wave is very high risk. I'm keeping that a very small position personally, but if it goes right, it could go very right. So that's why I want to have exposure in it. Kate Box, I still can't believe Kate Box is the levels that it's at. I looked at the recent trading update and I can't believe the share price is where it's at off that trading update. I think the company's been doing fantastic. So yeah. Any thoughts on Hargreaves Laws down? I still won't buy. I just can't buy it because I just don't believe in it. Like people talk to me about, which stockbroker should I use? Should I use Hargreaves Lansdown? Or I just Trading 212. It's the best app. It's as good as, in my opinion, Hargreaves Lansdown. Apart from obviously the premium you get around like the custom services and everything like that. I just think the new generation that are coming through, like why pay them ridiculous fees for Hargreaves Lansdown when Trading 2 is just as good? Granted, there's a few things that aren't as good because you aren't paying that premium, but it's for what the difference is, it's not worth a premium. So it for me, like I am not recommending it, so I can't recommend it as an investment, and I can't put my money in it because I don't believe in it. So yeah. Lithium Americans Corp. I don't have much knowledge in that space, so it's something I'm kind of staying away from. Anything like in that sort of space, same like mining space, I always stay in my circle of competence, and it's out of it. So I have got, my opinion is not worth listening to in that space because it's not a good opinion and it's not a knowledgeable opinion, is what I'd say. Can you do live connect more than usual? Because they free. We do a live Q&A session every month on the Patreon. Next time we'll probably do a live Q&A session on the YouTube. Will probably be 15,000 subscribers. So obviously, the quicker you guys get me up there, or if you're not subscribed, subscribe and obviously share it. That'll help us. But that'll probably be the next time we do a live Q&A session on here anyway. But I said we'd go for half an hour. We're going for 45 minutes. I've got a stock request to load up on the Patreon. So anyway, thanks for joining. Thanks for the 40,000 subscribers as well, guys. I'm going to call it there, and hopefully it won't be so long until we do a 15 subscriber live Q&A session anyway. I'll see you in a bit. See you on Monday. I need to record that video as well. I need to record tomorrow's video as well. So I need to get on that anyway. So yeah, I'm going to leave it there. Right, catch you all in a bit.